schedule for all the events with the county association. One of the comments that, for those of you who weren't there last time, is EY is going to hire, what was it, 12 interns and 14 full-time professional staff? 12 full-time interns and 14 full-time professional staff. I have never seen that many be hired by a firm of rules since I've been here 15 years. Economy has really been horrible, supposedly. Well, actually, it hasn't been horrible. I'm twice as wealthy as I was when Obama became president. Stock market's more than double. I mean, 2.5 times as well. Just based on the stock market, going crazy. So for people who already have some wealth, it's really good times. If you're unemployed, not so hot. If you're working for minimum wage, it's starvation, right? But for the rest of the economy, for the upper crust of the economy, it's top 30% probably. Really good. Really good. Yeah, anyway, so you guys are joining that. I mean, the old one, well, not really, but it's better to be in that group. But just remember to get charity. Hey, guys, vote for raising minimum wage. It's good for the economy, good customers. Okay. But anyway, so there are going to be lots of jobs, I think. They're not going to be the only firm that's looking for people. I got a call from a former student at Crow who wants to come and speak to you guys. They do that sometimes, but it's semesters over. And they're hiring. And so it's going to be crazy. They're going to be hiring a whole bunch of you guys, even though you're not at all qualified to do anything. It'll be great. Right.
I have a question. Sorry for this question. So you're saying they're hiring interns and also full-time as with the certificate?
Full-time interns. They're going to be full-time interns and then full-time grads, right? But in the second half of your junior year, or sometimes the second half of your sophomore year, you do a full-time internship. If your grades are good enough, second half of your sophomore year. And if you do that, then you can get another one in the second half of your junior year. You make a lot of money, you get the equivalent of 2 business seasons. We've had firms ask us before with students who've done this, not very many students have, but before with students who have had partners say, well, should we promote them to senior their first day at work, or should we wait a while? Really nice. And 2 busy seasons is really something. And you get paid extremely well, $20 an hour, around that range, and it depends how many hours you work and how many months it lasts. How much you make. But it's 15 to 25,000 in 3, 4, 5 months. Not good. It's just like after you graduate. So this is like a year's experience that you can get by doing a full-time internship. You guys want one? Yeah. And yeah, you do. Yeah. You want one? It's just amazing what it does to your resume. And I talked to you last time a little bit about part-time internships. Give the place consider to use a part-time internship. Don't be crazy. You're talking about the one that you got it, fantastic. That looks so good in your resume. And you're kind of dumb, like a small guy like me. So you need something on your resume that's really good, right? Build your resume, build your resume, build your resume. They're not even going to look at you. They're just going to hire you. That's going to be nice. That doesn't mean don't study. They'll look at it as a 1.3 or something. All those stuff. You have to pass the CPA exam too. Right? So start doing this stuff. Anyway, who do we have tomorrow? Deloitte. You guys know who they are? Yeah. One of the big four. Yeah. Most prestigious stuff you can get in your account. Right? Absolutely. Go meet them. Shake their hands. I told you all that crap. Good. Okay. The next day is an evening one with.
Tomorrow there's an evening one.
Oh, it's tomorrow.
Yeah.
Oh,
there's one during free period.
Oh, there's one tomorrow.
6 to 7.
6 to 7 tomorrow. You guys all signed up for these? I forgot about that. I was on the list. There's no extra question. So there's 2 tomorrow. And then on Wednesday there's another one. Harvey Schmansky? Now Wednesday? This is ridiculous. Right?
Yeah.
Oh, PwC first. Yeah. So do you guys have the schedule?
Yeah.
It's going to be over in a couple of weeks. Opportunity gone. To be here. And even if you're not going to do a full-time internship this time, which most of you will not, they'd rather that you had done 211 this summer, right? And then interview before. But you guys will be interviewing for them next spring if you don't this spring. We can talk about whether or not you should, right? If you did really, really well in here, and you're one of the stars in this class, they may be asking me who the stars are, right? They're asking who were in 101 from summer, because some people want to hire part-time interns, and so they're asking me who they are, right? So you want your name on that list. No pressure, however. Just do your best. Do as well as you can. Go to this stuff, go to it. How much time is it gonna take? You don't have enough free time to do all this stuff, do it anyway. Miss work, make it up later. Don't miss any classes. Unless you can arrange, right? It don't have to be at the same time, you can arrange something to accommodate it. I'm not kidding. Put off studying for my quiz and before run it to meet these people. You guys see the drift how important this is? They're gonna know her, not know you. You're done. Or it's the other way around. She's done. Got it? Okay. You guys can listen to me or not, for yourself. I have only seen, 2,000 students go to work for public accounting firms in my career. Got a good job. Where's you? So is that enough? Your stupid organization?
Yes, please.
Yeah, please don't talk about it. I'm gonna quit talking about it completely. You can stand up and make an announcement when events are, people aren't signing up and stuff. I'm gonna just quit talking about it. You guys can get a job if you want, or when you have a career position, or not. Suit yourself. Right? I already screwed up my career. Take care, teach you. Okay. All right, guys. So let's talk about chapter 1 and 2. Man, it's just all conceptual stuff. You had all those principles anyway, didn't you? In about 2 pages. And now we want you to really know it. So, yeah, we were talking a little bit about what kind of questions are they going to be. There won't be any problems. How do I do problems? There are going to be multiple choice, but they will be CPA exam multiple choice questions, every single one. Got it? Which means they're almost impossible. So now, but on CPA exam questions, they will give you a question with 4 really good answers, and you must choose the best of the 4 really good answers. Everybody got it? So it's not like you just look at it and say, oh, those 3 are ridiculous, and this is a good answer. No. All 4 are going to be good answers. How do you know which one's best of 4 good answers? If some of the answer stems are a subset of another one, look very carefully at the one that includes the subsets, but then read your question carefully because if it's very specific, guess what? It might just be a component of that. It might be a subset. So read carefully and think and practice these things. There are multiple choice questions in the book. On the CD-ROM, if you got it, if you got your CPA review manual, I suggest you get. If you have to get that and you have a CD-ROM, there are thousands of multiple choice questions you can answer. Everybody got it? So you can be practicing and practicing them. You know what? If you get a CD-ROM and you work all the questions, I bet people have worked the question that I give you on every quiz and every test. Because mine are off the whole CPA exams, and that's what all those are. And that's not cheating. If you know everything, it is not cheating in a class. I had a guy out of me one time. I used some obscure CPA review manual before we had it electronically. And I used one that I had for a long time, some obscure one, and I had 4 different ones or something at the time, and that I was drawing questions from. And I just used one of the CPA review manuals and did the whole exam. And he walked up to me after the test and he says, I think I cheated. And I says, why do you think you cheated? He says, because I did all those questions last night. And I says, where'd you get those? And he pulls out his book and he's got one. And he says, is that the only CPA review manual you're using? No, I'm using 2 different ones. I do all the questions in both of them. And it wouldn't have made any difference if you got it or not, huh? Of course, we got on certain right. That's fine. I didn't care. That wasn't cheating. That's working. Okay? Work. And you won't believe how it'll pay off. It's just incredible how it'll pay off. The other alternative besides 4 good answers is guess what? 4 horrible answers. And you think, please just let me write down the answer. I know the answer, and you're giving me 4 things that are wrong, or sort of wrong. And you pick the one that is the best of the 4 awful answers. That's how they determine if you can discriminate, you can make judgments. Okay? I don't think it's tricky. I don't think it's unethical on the part of the CPA exam writers, right? You know, if there are people writing the questions. They're trying to make it hard, and they're trying to determine if you really know what you're doing, and if you can apply judgment. Okay? So relax when you get it. I'll also give you questions where I'll give you a CPA exam question, and then I'll remove all the responses, and I'll just let you get the easy answer. That's really preferable. Believe it or not. You won't think it is when you get it, because it's this blank line staring you in the face, right? Maybe it'll be one or two words. I'll give you a definition, you give me what the words are, the definition is for. Alright, that's not bad. Or maybe I'll give you a situation, right? And you tell me what standard applies to that, right? Okay? What concept applies to it, okay? What it is, what is the concept or assumption applies. That's real common. Or I might just give you the word and ask you to define it. Okay, who in here can tell me what an asset is? Probable future economic benefit obtained or controlled by any as a result of past transactions. You will write that down for me. You guys haven't studied at all. Yeah, okay. My principal students are working really hard, and I just had a sense with you guys that you're so confident, and you did so well in intermediate and other principles, and you have so much other stuff going on. I can just work in this like I did in principles, and everything will be wonderful. Did I ever ask you to define an asset with that sort of a definition in principles? I didn't ask you to define an asset at all. I was training you at how one was so you could know language. What about kind of increase and decrease? We're way beyond that now. Have you ever been the drift of this thing? And there will be some short essay or short answer, a couple paragraphs maybe, short essay, a couple paragraphs maybe just a few sentences. I'll leave a little space and you can fill it up. Okay? Sound good? Okay.
Now you guys don't like me anymore. Just doing really good until I said that stuff.
All right. So, can somebody tell me what the executive financial reporting is? Let's go to page 5. You'll be able to do this. I'll say, what is the objective of financial reporting? And you will write down. Look on page 5. It's okay, for now you can actually just read it. Because I know you read this. You guys have all read these chapters, haven't you? Why don't you know what's in them?
Memorize it one week.
It's not memorized. It's knowing. It's knowing. That's hard. Because what you're going to do first is you're going to memorize it, kind of, and then you're going to convert it to knowledge. Memorization is worthless. Well, on this quiz it'll be all right. But then it'll be gone, and you won't have it for the CPA exam. So you need to know it. So ask yourself constantly, why? 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 Objective financial reporting. What's the objective or purpose of financial reporting?
You have financial information about the reporting entity that is useful to present and potential equity investors and their
Actually, you should add in decisions about that research. That ought to be there too. I know, it wasn't gold. You tell me the rest of it too. You know what's really fun with this? I'll give you take-home exams where I'll have you do these, and some people will be word for word. You think they copied it? Nah, if somebody was cheating and was copying it out of the book, they'd change a few words to make sure I didn't know. And they're scary people. Word for word, everything perfect. Wow. Some of your competitors sitting in here will do that. Do you have to have a word for word? No. I want the keywords. I want the keywords. You know, sometimes, if you're looking at it and you're figuring it out, you might as well just do them. Wow. But don't memorize. Understand. So when you look at that, what are we doing? What do you want to know? You tell me what you need to know to calculate the value of a business. That's what we're giving people, is what they need to do to calculate the value of the business. So they can make a decision of what to buy, what to sell, what to invest in, who to hire, what kind of products to sell. I'm not kidding. How much to sell them for? All kinds of decisions. How do you value a business? How do you value an asset? Everything is worth what? It's what? But somebody will pay for it? Yeah, it's true, but we got to decide on it. We can't get off on that. It's true, things are worth whatever we pay for it. If we go buy a new car tonight, right, and he buys exactly the same car I do, and he's a better negotiator than me, he pays $20,000, I pay $25 for exactly the same car. What was his worth? 20. What was mine worth? 25. That's true, but that's not even used to decide how much we're going to pay for the car in the first place. We had to decide before the fact. What do you need to know? What's everything worth? I like you guys better than most classes, so I'll make it be me. I get run over by a truck or hit by lightning when I leave here, and I'm dead. What's my wife going to sue for? Everything I'm going to make until I croak. She's going to tell me I was going to work to 100, right? Okay? And all of that cash flow, are they going to give them the full amount of cash flow that I'm going to earn for the rest of my career? Of course not. What are they going to do?
They're going to value how much you're worth to them.
Yeah, that's the cash in the future. So I want to know how much cash. You guys are scary, like every other intermediate class. I taught you this. How much? What else do you need to know? By the way, you're worth more than I am now. Because I'm old, you're young. I'm worth more per year than you. One hell of a lot more than you, I bet. Right now. Okay, a lot more. Although I'm declining in value every year. Not awful, because I can probably go back in public accounting. They wouldn't take me. I'm too old. Okay? Right? But I'm still worth a lot more than you right now, huh? Per year. But you are in total. Why? How long are you going to get cash flows? How much cash per year? How long are you going to get the cash flows? Have you guys ever done a discounted present value problem in your life? Calculated the present value of something? The present value of anything, including a company, is what? All their cash flows, how much, for how long, when, right? That's when, okay? How long or when, right, guys? And what else do we want to know? Their interest rate. You bet you got to have an interest rate. I'll buy that, interest or rate, but what's that based on? What's the big factor in there? What are interest rates composed of? You guys are going to learn it this time, right? Keep it this time. True return. Or a fair return, or a real return, or a nominal return, right? It's the rent of the money. Usually we think of that as being about 2 to 3%. Finance and accounting and econ types doing research on it. What do you add to that? You guys just want rent on your money, or do you want to be sure that you don't lose something else? Inflation, expected inflation. You're supposed to know this by now. And that's exactly what that definition is talking about. True return plus expected inflation, whatever that is, which is about nothing now, right? It's a bit so low. Okay, what else? I have credit cards. I don't know what our interest rates are, but I think they're probably around 5%. So. Any of you guys have a credit card? Is yours 5? How come? How come yours is more? There's a guy that works for a bank over there. How come yours is more than mine? Why can I have 5% and you can't? What's yours? 18. 18. You didn't work for the bank and it's 18. It'd be 24 if you didn't work for the bank. It'd be terrible, wouldn't it? Right? They're giving you a deal. Why does he cost 18 and I only cost 5? Because I have credit, because I have financial backing, because I have economic resources, because I have a track record, because I am less what? Risky. It's risk, okay? So it's your estimate of the risk, right? So the difference between his 18 and my 5 is he's got 13% more risk than me, because the true return and the expected inflation, which is risk-free, is the same for both of us, right? Okay. You're supposed to already know this. Come on, you guys. Pull back all the stuff that you've forgotten from your other classes and add this knowledge set to it. And then you could remember something like this, because you know what? Provide financial information about reporting entity that is used for the present and potential equity investors, lenders, and other creditors. What do they want to know? How much cash is coming in? When is it coming in? How risky is it? What's it worth now? How does the bank decide how much interest they're going to charge somebody? That's it. That is it. That's it. Yeah. Can they repay? Ultimately, can they repay? How secure are we? That's risk, right? Okay, guys. So when you look at these definitions, try to make them real for you. Okay? I would expect that you would know that, of course. Oh, by the way, all these little yellow boxes, they're really handy. I'm not going to give you quiz questions on them. Read them to give you insight. Okay? You want to read everything, including the footnotes. I might give you quiz and test questions in the footnotes because it's important. I don't know, sometimes they put stuff down in the footnotes, at the bottom of the page, and I look at it, what are they doing? Why did they do that? That shouldn't be in a footnote, it should be in the middle of the page. And then I remember, scholars read everything. It doesn't matter if it's in a footnote or not, you read it. You guys want to be professionals, right? Read everything, and understand everything. These chapters aren't very long, are they? You can read them really fast, and then you have to read them over and over. Read them slow. Really go after them, right? If it helps you to highlight everything to slow you down, fine. But I always did when I was in your shoes, I'd highlight almost everything in every page. then I never went back and looked at it again. Slowed me down. Whatever works for you. Can you read it and then outline it? Sure. Can you read it and take a bunch of notes? Sure. You never look at it again, it doesn't matter. Actually taking the notes helps, okay? The things that are like this, text and material. Okay, this is not gonna be some sort of I'm sorry, it's not psychology, guys. I'm not gonna give you some really easy questions that show that you have sort of a grasp, okay? Psychology, by the way, can be really hard, and the PhD sometimes I have several years in psychology, so I'm not making fun of psychology. I'm just thinking of 100-level psychology class in front of me. What do? You get a general understanding and, you read it and take it fast and you're fine, right? No problem. It's not gonna work that way, so.
Just to let people know that haven't happened before, the other stuff. Okay, so let's take a look at, now quickly first, the SEC, you guys are reading all this stuff, right? The SEC versus the FASB.
What's the huge difference? Let me pull that out.
The FASB creates the standards while the SEC is creating the FASB.
Okay, the FASB actually writes the standards. That's because they have a big budget. Because it's financed by industry and by CPA firms. So the FASB has money. So they have a budget, they have people working for them. So they study accounting issues and they actually write the pronouncements, vote on the pronouncements. But I don't like the SEC part real well. They oversee it. Well, they enforce it, that's true, or supposed to, but they don't have staff to do it, so they kind of enforce it. They're responsible for enforcement. But also, here's the deal. They have the right to issue the standards. They let the FASB issue as long, so oversee it a little bit on the right direction, right? Because what happens is the SEC, if they don't like something the FASB put out, guess what they do? They put out their own, and the FASB ceases to have any standing. Got it? So who has the power? This is the answer on the quiz question, answer on the test question, answer on the final question probably, answer on the CPA exam every time. That's why I do that. Okay? Who has the power to write generally accepted accounting principles? The SEC. Who does it on a continuing basis? The FASB, and before them the APB, and before them the ARB. Got it? Okay, so that's really important to have that distinction down. The FASB, is that a governmental entity? No, it is not. Okay, it's us. It's the profession, really. Okay, self-regulation to extent, right? Okay, the SEC, it's a governmental body. The chair is appointed by the president, confirmed by Congress. What if Congress doesn't like the chair of the SEC? Well, first, they could not confirm them, but even after they're in there, what should they do? And this happens. They can take their budget away if they want to do what they want them to do. Let's see, it's Congress. What's Congress influenced by? Everything. Businesses, lobbying, right? Always, not just now with our spring Congress we have now. Always, right? They're getting pressure from business to do what businesses want. So this is a political process, and they talk about it in the chapter, don't they? Should be able to tell me about the political process. Should be able to tell whoever writes the CPA exam questions. It's a political process. We are trying to get the best financial accounting reporting standards we possibly can, principles we possibly can, except what? It's a political process, and everybody's got their vested interest, okay? So there's a lot of debates about this. So this is really a convoluted process, you guys, really, okay? So we get some strange things. And later, when you get into pension accounting, for instance, in 313, you're going to believe how messed up it is. It doesn't make any sense whatsoever. They were all political compromises. And if you understand they were political compromises and you understand what went on and all the compromises that were made and all the discussions and how they ended up where they're at, well, it makes some sense. Just on that, and then you can remember it versus memory, right? What the rules are. There aren't rules, there are principles. You're supposed to follow the generally accepted accounting principles unless you have a good reason not to. I've actually not followed GAAP in a couple of instances in my career. Usually, of course, you would, right? It's what everybody expects. But if you think the disclosure is better not following GAAP, that's what you do. Okay? All right? You're supposed to be a professional. It's judgment. Okay? Besides, it's always interpreting GAAP anyway. Okay? Coming up with your particular interpretation, really. Okay. So, they talk about that whole process. I don't know about that. They also talk about PICABOO, Public Company Accounting Oversight Board. They don't have to be called PICABOO, you don't, right? That's your treasurer call professor or something. Okay, Public Company Accounting Oversight Board. Okay? Unless you're just with other accountants. okay? What's the deal with that? It used to be that the profession, the AICPA, a subset of that, wrote all the auditing pronouncements. We don't anymore. Since the Enron fiascos, right? And WorldCom and collapse Martin Anderson, since that period of time, we don't have self-regulation in auditing anymore, basically. We have a quasi-governmental, quasi-private organization that is funded specifically, it's well funded, but it's funded specifically by money that the law requires companies to pay to this organization so that they can be audited, okay? And then the CPA firms are monitored, right, the work they do by this organization. And mostly it's staffed with retired partners from CPA firms, right? So they understand how to know what they're doing. Okay, so the Public Company Accounting Oversight Board. In this class, you just got to know about that, what it is. In auditing, we'll go into that, okay? You get that. All right, so good. You asked about the years, you have to know any dates, okay? So, yeah, I think I would know that the Committee on Accounting Procedure, which wrote accounting research bulletins, there were 51 of them, right? And then they codified them, they put them together, right? That's from 1939 to 1959. What happened just prior to 1939? It was a Great Depression, right? And it was the accountant's fault. Everything's the accountant's fault, right? We didn't tell people, we didn't warn people. Actually, there is some money, okay? So that's not literally the accountant's fault. There were swindlers who were swindling people. We didn't do anything to stop it. It's more like that in each one of these scandals, these series of scandals. Seems like every 10 years we have a whole bunch of big scandals. Anyway, so about that. So, 1939 to 1959. What was going on in 1959? There was a lot of boom after World War II, right, and then the Korean War, and there was a lot of growth in the economy, and there was a lot of wheeling and dealing and a lot of things. So then what happens? Well, maybe things aren't working well enough with just this committee, and maybe we need an APB. And the APB came out so that we could get more GAAP out, more generally accepted accounting principles out. That was the idea. Okay, and there are what? A lot of members in it. They turned out a lot of work. It came as a result of this WEED committee, which is what? The Congressional Committee, right? Congressional Investigations. Okay, that's where they came from. Okay, and so they went from 1959 until 1973, right? Okay, so then what comes as a result of that? The FACTI, right? Okay, so how long has the FACTI been around? Yeah, 1973 now, it's lasted a long time. And man, they crank out announcements, don't they? There are a lot of FACTIs, a whole lot of FACTIs. Could you write me an essay, this information on page 10? What are the advantages the FASB is supposed to have? We can debate whether they're really advantages always or not, but what do you think? From the WEED Committee's recommendations on this, we got to do something. So they come up with this Financial Accounting Foundation, which then selects the members of the FASB, and then the FASB is responsible for writing GAAP, right? They're coming up with GAAP. What are the advantages? Smaller membership, 7 instead of 18. Easier to get consensus among 7 people. Easier to vote, easier to get work done. Of course, they have huge staffs, right? But still, there's only 7 people making decisions. Full-time remunerated, which means paid, right? They're well paid, they're full-time, they sever their ties with their organizations. So what we say is it's smaller membership and they're paid, right? They're not volunteer anymore. Greater autonomy. The APB was a committee of the American Institute of Certified Public Accountants, which is kind of our union. Never say that, right? But it kind of is, right? Sort of like with the doctors, right? The AMA, we have the AICPA. It's like bar associations. We've got the AICPA, and they lobby on our behalf, right? With Congress, they do, right? And they were responsible for writing standards for auditing whoever, longer, okay? This was a committee, the APB was their committee too, and they were responsible for writing GAAP. The FASB is quasi-independent, right? So we're getting less and less self-regulation with each wave of scandals, you guys. You gotta fight the scandals. You gotta fight people stealing money, basically, right? And us being involved in any way, helping prepare the financial information they use to steal. Okay? Basically, that's what it comes down to. Okay? So, anyway, that would be a profession, right?
greater economy anyway, so they're not a part of any single organization, okay? Increased independence, they get rid of their positions with their firm,
right? Now, can they go back? Yeah. Okay, but they sever all ties during the period they're not getting compensation.
and broader representation. Everybody in the AICPA was required to be a CPA, so obviously, because they remembered the AICPA, so it had to be CPAs. So all APB members were CPAs, and guess what?
You don't have to be a CPA to be on the faculty, right? Broader representation, supposedly. So these are a lot of different resources. So important thing to know.
Could you write me a little essay on the top of page 12? This is getting horrible, isn't it? In the top of page 12, could you tell me about the process?
Just very basically, you know, a couple paragraphs.
Look at that blue box there on the top of page 12.
Topics identified and placed on the board's agenda, huh? Okay? There's an issue. We need to deal with it.
Preliminary reviews are collected. Research and analysis conducted. Preliminary reviews and pros and cons are issued.
It'd be a great place to talk about this political process, right? But we do this. Lots of different viewpoints. Companies might want to do things differently than the auditors do. You suppose? Different than the government might want to do. You suppose? Right? So it depends on who you are in the deals, right? Different than investors might want you to do, huh? Okay, might have different ideas.
Okay, so they have a public hearing on the proposed standard. What do you think? Okay, so they're coming up with this proposed standard. All right, and then any more comments? This will be your final chance after what? The exposure draft. The board evaluates the research, public response to issues, and exposure draft. The exposure draft goes out and they discuss that some more, evaluates all the responses to that, and change the exposure draft if necessary,
And then they vote. And if they vote in favor, 4 of them out of 7, you get a new factor. Got it? New gap. Could you do that? And by the way, is this kind of a logical sequence? Yes. So, I don't know, you memorizing this stuff or learning? I don't know what it is.
okay, hard to say. I can't remember anything, so I couldn't memorize it. Okay, anyway, so read about these things. What's the emerging issues task force? If I just said, what is the emerging issues task force?
Or I listed what they do, and then they're one of the responses, right? There's 4 you could select from, and they're one of them. What are they? What's this? The FASB was so busy with proposals, right? Issues they needed to work on, proposals, and then coming up with an exposure draft, and then trying to issue a FASB or not, you know, and keep working on it and working on it. They're just so busy, they finally did what? Establish this organization that looks at emerging issues. Yeah, they can do that. They can do it pretty quickly. But when they do something, is it authoritative? Is it gap? No. What they're doing is they're getting things ready to put on the faculty's agenda, basically. Okay?
But if they're working on something and they've said something about it, is that useful for you to know about if you're trying to handle those accounting situations?
By the way, how can things change so much all the time? You guys, there didn't used to be leases. They didn't exist. There's a whole bunch of accounting done for leases because people created this thing that is sort of halfway in between renting and buying. Really, you can buy stuff or you rent stuff. There's not something in between called a lease. Either your lease is a purchase or it's really a rental. We have all sorts of ridiculous rules to try to determine what it is in lease accounting. It's just nuts. You'll do this in 12. It's just crazy. Maybe 250, maybe someone. Okay? It's just crazy. We didn't used to have 2 types of pensions. We only had defined benefit, where the benefit was set and the company would fund the benefit. Now we have defined contribution, whole new accounting for that, where companies only contribute so much and how much you get if you let them in is your problem, not theirs. And you see like maybe they wanted that, right? We've got different accounting for that. So as people develop new ways of doing business, guess what? We have a new gap. That's it. And then things just change over time too, right? Ways of approaching it. All right, wonderful.
On page 13, down at the bottom, they list the types of things. I know what every single one of those were at the bottom. You know, what are these things? And how authoritative are they? I like this. Widely recognized prevailing industry practices. Yeah, what people do. By the way, what is the least authoritative thing that you can possibly imagine in terms of maybe understanding things that they have?
The second most worthless, second to the bottom, is what's in a textbook. You look at the real standard, you don't say this was in my textbook. Go there, right? Look up the real standards and read it, okay? The real principles. And the only thing that's worse than reading in a textbook is guess what? Richardson said it, Beck said it, Schrader said it. That's not GAAP, that's just pure bullshit. Okay? It's our opinion about GAAP. Your opinion's what matters. You guys go to work, you read it, you interpret it, right? And yeah, you can call me if I have the right thing. And I'll say something like, how much you pay me for this? And you'll laugh and say, nothing. And I'll say, you're gonna get your money for it, and I'll tell you what I think, right? I do that all the time. And it's fine to call me and ask me that. Like, I don't know. There's this wonderful FASB codification, you can read that, you can know that it's codified. But there was a whole bunch of FASBs and a whole bunch of, by the way, the ARBs that are not superseded by an APB or a FASB are still in effect. Everybody got that? Still in effect. The APBs that are not superseded by a FASB are still in effect. So a whole bunch of stuff is still in effect and a whole bunch of it is superseded. But what it used to be, they were just numbered, 1 through whatever, and a lot of them. And they were all out of order, and finding something was just really annoying, They tried to cross-reference them. So now what's happened is they did this codification, they took all of the GAAP, right, that's written, okay, and they put it into a searchable document, basically. And we have access to this online, and you can send you guys the email I just got from David Collins on what our passcode is. You guys get free access, okay? So pretty cool, right? And you can go out and you can look at this thing, you can research anything, you can do word searches, you guys know how to search, use the search engine, right? That's all it is, okay? But pretty cool compared to the way it used to drive me nuts. So that's what that's about, big deal. Well, it is big deal, it's nice. The political environment is on page 16 that I mentioned, and they show all the different stakeholders, we call them, user groups. And just think about that. You don't have to memorize that, but think about all the different people that use financial statements and how they might have a different view of what should be done. What do you bet investors want more information than companies want to give them? Find out. What do you bet companies don't want their competitors to know very much about what they're doing? What do you bet they try to limit disclosures because of that? Disclose? Yeah. So just kind of obvious things. Might they not want the government to know too much? Yeah. Maybe. Might the government want to know more? Yeah. Okay, just simple. So when you write an essay about political environment, just think about who are the players and how might their interests be different, huh? This is not hard. Just let yourself think about it, right? The things you already know, I bet. Expectations gap. That one's interesting. What's the expectations gap? Before you guys took principles of accounting, and maybe even after, how accurate did you think financial statements were? You look at Young Brands, you see how much cash they have listed there. You think that's how much cash they have? What are the odds? You know the bank accounts they have. It's not exactly how much cash they have. It's a pretty good estimate. But cash is pretty close. How about inventory? Oh my God. Does Ford know how much inventory they have? Think of work in process inventory at Ford. They have automobiles that are just a frame sitting on the assembly line, and then on the other end, they have automobiles that are completely finished, ready to start. They're not started yet, so it's not done, right? And everything in between, and then they value those by adding up the raw materials, the direct labor, right? And then they apply overhead. That's all that. They're guessing how much inventory they have, of course. We don't even know what the inventory costs after they produce it. Not really. We're estimating it. This one's easy. Allowance for doubtful accounts. Accounts receivable for a company. You look at accounts receivable, that's probably what's owed to them, right? But then they have this big number, allowance for doubtful accounts, and what you really care about is the net realizable receivable, of course, how much is going to be paid to them, don't you think? Would you guys buy into that? Who cares how much somebody owes me? I care how much they're going to pay me, don't you? That's why we do the allowance, isn't it? And the allowance is what? A wild ass guess. No, it's an educated guess, right? Still guess. Yeah. Do most people think financial statements are estimates? Do they think management might have a bias in doing their reporting? And an auditor might have a different bias if you're trying to work through that. And you're compromising on what the numbers are. You're making estimates and then compromising on the estimates. Wow. Does the public think that? No. They think we're telling them the exact truth. I know everything about Young Brands. Right? Young Brands even knows everything about Young Brands. No, they don't. It's impossible. Can't do it. Some of you guys do have internships out there, right? Am I right about this? When you think about it, just think about what you're doing, right? Not very many people have internships. Yeah, fix that. Gosh, I'm not kidding. A class like this, at least 50% of the share internship. Is it free? I don't know how. Get one. Get one. Now. It's an experience. Change you guys. Unless I do it myself, you won't do it. Is that right? Ever heard that before? Okay. But you know what Sarbanes-Oxley was? That's what the people who changed them. Public company capital and so forth, right? What is Sarbanes-Oxley? Who are they? You guys know? I think it's a senator and a congressman. And they got together and came up with a law to try and slow down the scandals. Some people think it was real effective. One thing we do know for sure, it generated a lot of wealth accounts. Because we got an awful lot of work to do. We did all kinds of work on internal controls and all kinds of work on improving auditing and that sort of thing. I don't know whether or not it's going to really make a big difference. I don't know. Although, now, some good things came out of it. Well, you have to rotate partners on engagement. CPA firms have to rotate the partners on the engagement. If you leave the CPA firm, you go to work for one of your clients, you have to not work on financial matters for a set period of time. It's only 1 year. Political compromise, right? But that's something, I guess. Let's see. Oh, this is a good one. The CEO and CFO have to sign, and they are now legally responsible with criminal and civil penalties if they sign off on those financial statements and they know they're wrong. Right? So, yeah, we're going to get some of them in jail now as a result of that. Auditors too, though. Auditors are always in that bond, but now management's with us. Okay, expectation gap. It's just that people out there in the public think we're doing something wrong. And changing that is just almost impossible. Almost impossible. People don't know debit means left, you guys. Come on. Do they really know what's in the financial statements? When they read them, they don't even know what they're reading a lot of times. And it's going to be your job to interpret them for them and let them know what they mean and help them make decisions using them. A lot of people like to use the cash flow statement. A lot of financial statement users really love cash flow statements over an income statement and a balance sheet. Why? You guys like cash flow statements better than balance sheets and income statements? You haven't thought about that. You sure you have to do all three, didn't you? But which do you think gives you more information? What's that?
There's a distinction because it's only the cash that's going in and out. Whereas you can have sales on account that aren't going to be contained.
Yeah, we think accrual basis, deferrals and accruals, gives us a better representation of future cash flow. It's a better estimate, right? We do. We'll talk about this a lot. We think our estimate of future cash flows is better using accrual basis accounting than using cash flow statements. Why? You can manipulate cash flow easy. I can have a lot of cash, just don't pay my bills. That's probably not healthy for the business, but if I don't pay my bills, I'll have more cash. And somebody who's just using the cash flow statement might look and say, oh, look at all the cash we have. I can borrow more money. That might not be helpful. I can sell off assets I need. I'll have more cash. You guys with me? Right? So I think the cash flow statement is the least valuable statement. By far. Why do people like cash flow statement better? They know what cash is. They know what cash in would be, and they know what cash out would be. And they don't have to know anything about accounting until they use it. The fact that it's not very valuable, oh well. I kind of hate the fact that we never went to having that statement. I wish we had. Way too many people want to use it. They even have ratio-based cash flow statements. That's that bad. But we have them. Ratio analysis. Those of you who have any principles that I make you learn the cash ratios. No, I said I don't like this very well. Why don't I like them very well? I think they're worthless. It's worse than not very well. I think they're worthless. Right? Does that mean I don't want to, that I do want to run out of cash in the business? Oh, no. You have to manage cash, but you also have to manage receivables and inventory, and, of course you have to manage cash. That's fine. Okay, all kinds of challenges, you can read all about that. Everybody says that we are stuck in history, right? Isn't that beautiful? And we're stuck in history, right? All we care about is history. If you were going to guess what my salary is this year, how about if I told you, just guess? I don't want you to guess. It's way too high, probably. I barely get minimum wage. But anyway, right, you could guess, but that'd be hard. What if I told you last year
I made 50,000, or if I told you last year I made 75,000, if I told you last year I made 100,000. What if I told you that? If I told you it was one of those, could you maybe make a better estimate than if I just said, pick a number, pick a number? Maybe a little bit, right? But what if I told you for sure I really made, let's pick one, 75? Now what do you got? Maybe some information to make a decision with, right? But it's historical, so it must be worthless, right? Those of you are going to be finance types. Oh, financial statements are worthless. But you're going to use them constantly. No, they're not. They're better than nothing. Even though they're estimates, they're better than nothing. Even though they're historical, they're better than nothing. But you know what? I don't care how much money I made last year. I don't care how much money a company I'm investing in made last year. What do I care about? That they're going to make in the future. That's what I want. I want future income. I'm always pissed when I find out how much I made last year. My wife always does the tax return. Ours is real simple, and I hate doing that stuff. And so, well, she can do a complex one too, of course. But anyway, she does our little simple tax return, and we just give the government all our money. And but anyway, she does this tax return. And I didn't make that much, did I really? Holy crap! We owe another $10,000, really? And we write the check and send it off. Every year, I wish I'd made less. But what about next year? I want more, right? I want more next year because I haven't spent that yet. Okay, so that's what you do when you invest. You don't care how well the company's been doing in the past, you care how well they're going to do in the future. But it's how well they're doing in the past a predictor of future. Yeah, probably. There's something there, isn't there? Right? Okay. How about though if it was a 100% commission salesperson and I told them exactly how much I made last year? Well, the year before last I made $10,000. That's my day because I sold nothing. The next year I made $2.5 million because I, did really good stuff. Sure. That helpful? Bigger picture, huh? What I know about sales and servicing and sales is going to make nothing the next year. 10 better than $2.5 million. Oh, a little additional knowledge for you would help too, wouldn't it? Right? Okay, and what probabilities are we having? Okay, so nothing. International accounting standards. International accounting standards. Oh, by the way, one other thing we should mention on the financial statements, besides wanting forward-looking information and not having it, there are soft assets on. Slavery is illegal. You can't have your employees on the financial statements. Anybody have a favorite restaurant? Great place because they have a great chef? They don't own the chef, but is that goodwill? That they have really good food, and the chef is there, and the staff are there, and they got the same thing everybody else has. They got a lot of goodwill, huh? A lot of value is what I mean by that. Real goodwill, right? A lot of value. You don't put that in financial statements, do you? Unless you buy another company and pay for the goodwill, you don't put it on there. Otherwise, you and I start a business, and we took $1.5 million goodwill the first year. Debit goodwill, because we did such a good job running the company, and credit net income somehow. Like, yeah, we'll go to the bank and borrow against it. What do you say? No. You can't manufacture goodwill for yourself. Okay, so the soft assets, yeah, all this expertise and stuff. Timeliness. You got to get financial statements fast enough for them to be useful. And in order to get them really fast, what do? We make a whole bunch of estimates. Could we get the real number if we wait? Sure. Tell you this, I could tell you how much General Motors stock is going to be selling for on December 31st, 2014, or pick any date. I can tell you. Is that useful information? Yeah. If you knew it now, you could capture all the wealth on earth by that date. Like just placing bets, and all the winning. Because people would bet against you. It would never believe you could keep winning, right? At some point, it's not. Okay, but you could really capture a lot of wealth, right? I can't tell you though until January 1st, 2015, okay? That information is now worthless. If it's too late to make a decision with it, it's too late. And I think that really brings the point home, huh? We want to get the information fast enough that people can make decisions, but we want to give them really good information to make decisions. Can you see how you might have a conflict there? Okay? And when you work as an auditor, you have that too. They need those statements out. But you need a good audit too. It takes time. So that's why there's all that time crunch, where you work so many hours to try to get something done, because you've got to meet a deadline. And the deadline is kind of artificial, but not really. Right? They need the statements, or the stock price is going to plummet and they don't get the thing out. Okay? And if it's complex and it's a mess, what do? Work. Right? That's kind of it. everybody does, client does too. So, and then understandability.
You guys are gonna be writing most of the financial statements. You guys really good writers? No. Should you be? Yeah, no. What I would say is, keep it simple. You like the fifth principle, keep it simple, stupid. Keep it as simple as you can. Try to not use jargon. It's gonna be bad enough anyway. If you don't understand it when you read it, you didn't do a good job. You're giving it to somebody who doesn't know anything about accounting. Come on, right? Get it down as basic as you can, as simple as you can, and as short as you can. It's not prose, right?
So understandability in the statements is just overriding everything. And then ethics, of course, everywhere. All right, I'm done with chapter 1. On page 25, you're not, but I am. On page 25, look at all those multiple choice questions. Did I need to do those? I don't think so. I did give you some recommendations for problems, didn't I? In this chapter, just do everything, isn't that what I said?
You say that on every chapter.
Yeah, pretty much. Yeah, pretty much. I had students do every single problem.
I did it well. But I don't think every single problem.
Okay, and you know about globalization.
Oh, I should talk about international accounting standards, right? There was this really big deal, 15 years ago or something. We started messing with, maybe not right now, started messing with trying to adopt international financial standards in the U.S. And we put it off, and put it off, and put it off, and put it off, because we have a big economy, right? The world's biggest economy. But now Europe's one country from an economic perspective, not politically, but from an economic perspective they are. And they're real big too. And China's real big, right? They're other big economies. Japan's been big for a long time. And Germany's a good sized economy. Well, what's happened is everybody else in the world has adopted international financial reporting standards. Everyone but us now. India's in the process of doing it. Oh no. What are we gonna have to do? Adopt. And you know what happened? Our stock exchange, the New York Exchange and the American Exchange both, will allow people to either use international financial reporting standards or U.S. GAAP. Either one's fine. Why? Because companies were not going to list with them anymore. It was too expensive. So they were all going to go to Europe and list their stocks. And our stock exchange says, no, we want the business. So there's now a lot of pressure on our government to do something. But there's some real interesting, as we go through the course, we'll talk about some of one's inventory. There is no such thing as LIFO, International Financial Reporting Standards. No, we love LIFO. It saves us taxes, even though it's totally irrational. We like it, right? Well, we could have deferred income taxes instead and not use LIFO. It'd be okay. And that's probably where we're going to end up. But do you think our Congress is going to let the Germans or the French, the European folks that started international financial reporting standards, we're going to let them tell us what our tax law should be? Suppose that's going to happen. Or what our GAAP should be, or what our anything should be in our political climate? Not much chance. And that's been the big hang up. The economy pressure is ready to go. It's silly having more than one standard around the world. We have all these global companies. Look at how big those companies are on page 32 and which country they're in. You didn't know those companies were in other countries. A lot of them, unless they have a foreign name, huh? Every company's not a U.S. company, of course. There are huge companies that are not U.S. companies. We got the biggest one. We got the really important one, like Walmart. Oh, anyway, that's what we're good at, is Walmart. So anyway, we know about the International Accounting Standards Board. Okay, all right. Don't get too much in depth about it. But read it out. Just go chapter by chapter, read it, think about it, fill it out. Okay. So how am I doing time-wise? Terrible?
6:52.
Oh, for God's sakes. Are we spending the night? Maybe we did need a review day because I didn't cover it. Maybe I'll be down and try to work together on Tuesday sometime. Really? Try about more. When is Tuesday? Or what time is Tuesday? Right after free period? Right before free period? Right after free period? You're coming in with the free period. Right? It's Deloitte.
Tuesday? That's on Thursday. Thursday.
Oh, PwC.
I have class right after too. I have class after.
How about right before?
I have class before.
No,
I think I have 6:50. It's closed actually.
I got class Tuesday, Thursday. Yeah, so like 9:30.
That's right before Thursday.
When is the evening thing on that day? The meeting thing on that day too?
No, there's one on Wednesday.
Tuesday evening? Really? I don't know. What time? After 5? Is that 5 good on Tuesday for now? Yeah. Not good? Don't care. No time is good. No time is good ever. 5 to 6? We do 5 to 6.
Much less this
Kind of schedule. What's that? 4 to 5? 4 to 5 is better? 5 to 6 is better? 4:30 to 5:30 is better? You only have a half hour anyway. Yeah, okay. Yeah. So 5 to 6? 5 to 6 on Tuesday. Does that sound good? Or tomorrow? Thursday, that's really good. Is that any better?
Not really, okay.
Tuesday better? Thursday better? Tuesday's better, okay. Send me an email sometime. Who's gonna send me an email? Go, sir. You're an officer in time, so you can start with. You don't need to.
What does that have to do with me?
Yeah, probably. If there's somebody in here to do it next time. We're not usually doing.
What time are we doing on Tuesday?
At 5. 5 to 6. Sure. Okay. And I'll email you guys and remind you. Okay, anyway, conceptual framework. Okay, what's the deal with the conceptual framework? What we were doing, you guys, is we were not, we didn't have theory for accounting. We just did it. But a lot of things are that way, right? You didn't really have an underlying theory behind it. You just did what you needed to do. And so it was really piecemeal. And so developing generally accepted accounting principles was kind of a pain because you didn't really have a framework to follow. So periodically what happens is the profession has gone back, and they did it when they did the ARBs back then, they did it when the APs was done, and then this is the effort by the FASB basically, to come up with an underlying theory to explain why we're doing what we're doing. It's really just economics, is all it is. So the economists in the crowd will kind of laugh at this stuff and read through it a little bit. But what we did was we defined things, and we tried to set out what would be the conceptual framework on which to build GAAP, right? But GAAP already existed, so you were trying to fit it to what already was there. So it's kind of a mess. And what you'll see with this, it's amazing. Number 1 on page 43 is superseded. Number 2 is superseded. Number 3 is superseded. What? So there's 5, or 4 rather, and there's 5, right? 5 still in effect, yeah. There's 6, and then there's 7. So you don't really have all of those. The first ones are gone, right? So a bunch of them are gone. And they talk, this whole chapter talks about what's in the conceptual framework. You need to be really comfortable with it. Oh, by the way, the questions we get on my exams and on the CPA exams, I won't say what is financial standards concept, right? Number 5. I won't ask you for the name or something. The question might refer to 5 and then tell you what it's about too. A little bit, so you can tell what it is. You don't have to memorize it, in other words, okay? So you don't have to know them by number. But just basically what's the idea. You know what, there's elements of financial statements on number 6. There's the things that are in a balance sheet and income statement. They're literally the elements of the statements. And these definitions that they have in the book here, they came straight out of the standards, okay? Out of the concepts, I'm sorry. Out of the financial statement concepts. So, take a look at this overview on page 44. What do we got? This is an upside down chart as far as I'm concerned, but this is the way they put it in the conceptual framework, so that's the way we do it. The objective is at the bottom, that's the first level, the why, purpose of accounting. I guess you can think it's a funnel. And then we've got the bridge between the first level and the second level, which are the qualitative characteristics of the information, you gotta know what all those are, and then the elements of the statements, which are the items that go in the statements, okay? You need to know what those things are too, of course, the definitions. So we've got assumptions, principles, and constraints, okay? How you would implement for recognition, measurement, and disclosure. So when we look at the basic objective on page 45, that's exactly the same basic objective that you have in chapter 1, word for word. It's the same one, guys, okay? So, I won't say chapter 1, that's not, chapter 2, 3. Okay, so just know it.
all right? What do we think about these qualitative characteristics? So just working your way down that funnel, I guess, okay? Look at the hierarchy of accounting qualities on page 46. What do we got? Capital providers put their money in, right? Okay, fine. And they're the investors and creditors, and their characteristics, okay? What's a big constraint that we deal with? Cost. We used to talk cost benefit, I kind of like that better. What's the deal? The cost to do it should be what? Less than the benefit derived. That's right. So constantly do that. It's really easy for accountants to spend a whole bunch of money gathering a bunch of information that's not worth the amount to spend together. Because we got to gather information, right? Make sure that the cost benefit equation works out. Right? The cost is less than the benefit. And you have to make a judgment of that. You typically know what the cost is, you don't know what the benefit is a lot of times. Okay? You make a judgment on it. So that's there. What's the pervasive criterion? I might have a question, what's the pervasive criterion? I'm not kidding, and then I'll list 4 things. And you'll say what? Decision usefulness. That's it. Are the financial statements used for making decisions? Management decisions. That's what decision usefulness is. It's that simple. Okay? Good. Then within that, we have these fundamental qualities. Relevance and faithful representation. Changed the names of these recently. Didn't really change the meaning, just changed the names. But think about a relevant friend and a faithful friend. What's a relevant friend? When you actually care about, right? Kind of, right? One that matters to you, makes a difference. In this case, makes a difference in the decision. The information could make a difference in the decision, therefore it's relevant, right? It doesn't make a difference in the decision, I could care less how faithfully representative it is, which used to be reliable, which is kind of better, relevant and reliable. But faithful representation, what does that mean? A faithful friend is one you can trust, right? Yeah, they'll tell you the truth, right? Now, they might not be as important to you in terms of relevance. Sad, isn't it? But sometimes true. Nice if your significant other is both of those things, huh? They're real relevant to you, and you can also trust them, right? You got both going. Okay, relationships work then. With information, you usually get more one than the other type, right? I really like this piece of information, but all I can get is a rough estimate. Better than nothing there. On the other end of the spectrum, though, if the information can really be trusted, I can really verify it, it's real valid, right? It might not be as relevant, but I still might like it just because I can anchor to it. Does that make any sense at all? And what's best thing, of course, to have? Both at once, right? You can count on the information, it's a really good measure, right? And it's relevant. Historical cost, what do you think about historical cost? It's certainly a faithful representation. I can measure it, right? Pretty easy. You can measure it, you can measure it, and look at the same invoice. Yeah, I mean, exactly the same amount, same dollar amount, right? But what's the problem with historical cost? Of course, historical cost on a piece of land is about 30 years ago. It's not particularly relevant. I want market value, right? What's the problem with market value? Oh man, there's all kinds of estimates of that. How do you find out what a piece of land's worth? Sell it. That's it. Otherwise, just you're guessing, right? It's your best estimate. Okay? Now, we might do an intelligent estimate, but it's still an estimate. Got the idea? So these are the trade-offs. You need to know what the 3 components are of relevance and the three components of faithful representation. How about this essay question? Tell me about what relevance is and what faithful representation is, and discuss. Okay, what do I mean by and discuss? You better have in there, relevant information has predictive value. I can predict the future with it. You know, predict the future cash flows, right? It has confirmatory value. What's that? I get a budget, and then I can, what? Confirm whether I met it or not, right? Okay, confirmatory value, that sort of thing. Materiality goes into, I think materiality goes into lots of things, though, but they put it into relevance. Materiality is not material, it's good now, but not relevant, right? So it would be material, it would have confirmatory value, and or predictive value. You got the idea? In order to be relevant. Okay. And then under faithful representation, what do we have? The information is complete. How could it be a true representation if it's not complete? Okay, it's neutral, so there's no bias in it whatsoever, and it's free from error. Okay? Know those things. Be able to write it that way. I can envision multiple choice questions where we would say, use a CPA exam question. Relevance, a component of relevance is, and then they'll list completeness, neutrality, free from error, and confirmatory document. That's an easy one, isn't it, if you know these? That's a joke. If you know them, you don't get stuck, right? You know them pretty well. If you could actually write a little essay about it, you think you can get the multiple choice questions right? Yeah. And you will see both. And, you know, it's easier to grade multiple choice one day, right? But certainly in the final, you see lots of multiple choice. But also in the CPA exam, you're going to get lots of multiple choice questions. Some harder, some easier. Okay, then these enhancing qualities really go to all of us. You see that? See, it goes all the way up to relevance and faithful representation. This is a nice little chart. Read the dialogue, though, and get the ideas, okay? And you can use some of their words, right? When you're writing a little essay, short answers, okay? Comparability, we used to use comparability and consistency both, and we still kind of do. For something to be comparable, what is it? Comparable across what? Information is comparable across what? Comparable across companies, company to company. Consistency is consistent from what to what? Year to year. Yeah, that's the way to think about that. Okay, really close. Okay, verifiability, what's that? If either one of you investigating, you could verify the information, you get the same answer. Okay, timeliness, you get time, usually we talk about that, and understandability is everything. Okay, so read through these, think about them, right? Okay, what do each one of the things mean? I hope you already did that. Okay, and they go on and on. And give you a really cool example. Okay, let's talk about elements. Basic elements over on page 52. Look how good I did on that definition of assets. Yeah, probable future economic benefits can be controlled by particular as a result of past transactions through that. So you look at that list and you think, are you kidding? I have to memorize all these? No. Know the key words. Here's the trick. Take a look at liability. Compare the liabilities definition to the asset definition. Let's see, probable is the same word. Future is the same word. Instead of an economic benefit I'm going to get, it's a sacrifice of economic benefit. Can you change one of these into the other one? Yes. Arising from a present obligation of a particular entity, yeah, well, it's particular entity up above too, right? To transfer assets to provide services to other entities in the future as a result of past transaction events. So that's the same as the other one, isn't it? Few words change. Who wants to get a star for the day? Happy face for the day. We'd like to get one. Show their brilliance to their classmates. You want to do it? We'll pick it again. You want to do it? You're going to always be the young one. Isn't that cool? I like it. That's good. When you're a partner someday, you're the young one. You'll be laughing about that. Yeah, that's nice. Okay. Really young one. Okay, anyway, I would like you to tell me, still give it a shot. I'd like you to tell me what they mean by liabilities being an obligation to transfer assets or to provide services. And this will help you remember that you need to provide services in there. You think about it, right? What are they talking about? What is that? Can you think of a liability where the liability is to provide services to someone? What happened? Well, that would be a prepaid. You're on the right track. Who paid for the service in advance? No, you did. You got a prepaid. That's an asset. That's not a liability.
No, I'm saying the person that paid for the service paid for the service.
I mean, the person that's buying the service. The person that's buying the service. Is that what you're going to say? Your customer paid you in advance. And what do you debit? No, you debit cash. Okay, you debit cash. You know, I got in one of my evaluations this summer, said I shouldn't be so mean to students, I shouldn't make fun of them when they have the wrong answer. What are we going to have no fun at all? You know, what's that about? Okay, yeah. You know, so what's the deal? You debit cash and you credit unearned revenue. And unearned revenue is a what? Liability. That's all I'm saying. Like you could have said unearned revenue or deferred revenue. They don't, right? They say you satisfy, right? By providing goods or services. That's how you satisfy unearned revenue, right? That liability. So it's right in there. So do it with each of these, you guys. Think about what they are. I can't believe equity. What they really should say on equity is assets less liabilities equals equity. That'd be easier. Instead, they like to make it flowery and say what? Residual interest in the assets of an entity that remain after deducting its liabilities. Okay. In a business enterprise, the equity is the ownership interest. So you gotta have some type of there, okay, you don't have that word for word. But yeah. You know what another name for equity is? Is net assets. On an individual financial statement, a personal financial statements, we call them net assets. What does that mean? It's your assets, what your liability, it's your net assets or net worth, right? Okay, so that's all it means. That's all it is. Okay, what's an investment plan? Contributed capital. We'll learn that one too. And it looks pretty long, but it's only because you can contribute all kinds of things, not just cash, right? You know what? You could have contributed capital by somebody investing in assets in the business, right? Debit the asset, whatever it is, cash, land, building, anything, right? And crediting contributed capital somehow, common stock, additional paid capital. You could also owe somebody money and satisfy the debt by giving them the stock. It's in the definition, you guys. You can, can't you? You owe them money, and now you give them stock for the amount that you owe them. You would debit the liability, eliminating it, and you would credit common stock and additional paid capital, wouldn't you? True? You could have some work done for you, right? You want to get some work done for you. Okay, so they do work for you, and that would be an expense, right? So you debit expense, but you don't have any money to pay them, and they're willing to take what? Some of your stock for a startup business. Lawyers get to do this all the time. It's the coolest thing. They help people set up businesses, right? And they take stock for helping them set up the business, and now they're having ownership share. If the business never turns out, they never get paid anything. If it turns out really well, and not make a lot of money, guess what? Accountants don't get to do that. Why not? We wouldn't be independent of the company anymore, and we can't be their auditor. Oh, crap. There are bad things about our profession. Right? That's one. There's others. If your client wants to give you product at cost, and effectively give it to you, you can't take it. You have to pay the price anybody else would pay. Because otherwise you're not independent. Oh, shit. I had a client that wanted to sell furniture, really high-end furniture, costs about 1/5 of what they sell for. Really does. Really nice stuff. 20-25% of what I have to pay if I just bought it from them and I couldn't afford it. It's way too expensive, right? How many things furniture stores do those sales are 50% off? They still make money, right? Okay. So anyway, yeah, they have very low turnover. They're very high advertising. So it's not bad. I guess it's the way the industry works. But I couldn't take it. Why not? I wouldn't be independent. Okay. I still need to that. Okay. What's the difference? Couple minutes. What's the difference? I have to leave right on time today. I know that's terrible, but it is my granddaughter's first birthday. She's in Portland, and we're doing FaceTime, and I'm missing a party for you awful people. That are damn well appreciated.
It's a choice.
I'm not a good grandfather. Clearly, not a good grandfather. I know. It's terrible. Yeah, no, it's sick. It's sick. Okay, figure out what revenues are, figure out what expenses are. We'll talk about this more. What's the difference between a gain and a revenue? A gain is peripheral. A revenue is in the ordinary course of business. It's what your major ongoing business is. There are expenses that go with revenues, right, guys? The cost of getting the revenue. Are there expenses that go with gains? No. You just have a gain, don't you? Right? How about losses? There's similar expenses, but there are no revenues associated, right? You have a loss on selling an asset or refinancing debt or something like that. Guess what? The losses are peripheral. You see that peripheral incidental transactions? Critical terms. Okay? So we'll talk about that some more. One last one. Comprehensive income and other comprehensive income and income. So if we had, but it's a lot on this. I don't know if you even picked up my voice. You ever going to listen to this again anyway? Why would anybody listen to this again? You might. Tell me the difference between comprehensive net income and other comprehensive income. Did you pick that up when you read it? I think that's the question I would have asked. I know net income, it's revenues less expenses plus gains less losses, right guys?
That's net income. You guys know what income statement looks like. Right? We'll go through chapter 3 again, 4 and 5. Okay, you know what net income is. Guess what? Comprehensive income includes net income. That kind of makes sense, huh? It also includes other comprehensive income, and if you add together other comprehensive income with net income, you get comprehensive income. Definition's easy. When you read those definitions, it's pretty much what it says. So tell me, what's other comprehensive income? What is this stuff that you add to net income for the company, or subtract if it's a loss, right? That you add, what is this other comprehensive income items that you add to net income to get comprehensive income? What is that? And we actually do a statement for this. What is that stuff? Give me an example, one example of something that does not hit the income statement that is an income item. No, that's investments by owners and distributions to owners. Buying this, issuing stock to the stockholders is that investment, right? And then buying it back would be buying back treasury stock, right? Okay. Or you could have distributions to the owners, which would be dividends, right? That's different. This is income. Anybody know about available for sale securities? I talked a whole bunch of that. I haven't made your account for it. Oh, I put out, in response to you asking and somebody, we were talking about three. I didn't put the final out there on Moodle. What I did instead, because I don't want that one here, I put the 3 exams that I give to the principal's kids anyway, so they've got it. So it's from 2 summers ago. My principal's exam for chapters 1 through 4, 5 through 9, and 10 to 14, those would be really good to look at. Now, I'm not going to quiz you guys on everything in those, but if you knew how to do all that stuff, you'd be in really good shape going into 211, right? And 212 and 313. Now, look at those exams. Feel free, right? Certainly the 1 through 4 would be helpful for the chapter 3 quiz. You need to know that stuff, okay? And there's deferrals included there. What made me think of that was I showed you guys how to do available for sale and trading securities, didn't I?
Oh.
Yes. What are we doing to gains and losses on available for sale, you guys? It goes straight into equity. Guess what kind of equity it is? Other comprehensive income. There's an example. Another one is pension. Expenses on pensions that we don't want to expense right now. Political compromise is what these things were. Oh, another one is foreign currency translation. So know what those differences are too. Definitions are easy. Comprehensive income is net income plus other comprehensive income. Other comprehensive income are the items that don't go on the income statement, go directly to equity. So you read those definitions, that's what they're saying. Get into the definition of your point so you really know what they said. Okay? All right. See you later.
Okay, so you got all the classes today?